Good morning, good afternoon, and good night. So let's take this back. We're going to take this to before the open and kind of talk through a few things. So, first of all, if we were to look at this overnight setup, we are going to see that we've not yet taken the long or the short side of this pre-market area that we tend to follow for the long or the short. So normally what that tells us is there's probably going to be some volatility. And when you get a setup like this for the New York one side, normally whichever side you take, it stays true. We typically will not go back and break the other side. Now, news events and things like that can change this, right? But on a normal day, this is kind of how it works, mostly, right? If we're throwing out any crazy news events that can occur. So if that's the case, we're gonna see which one of these go first, and we're gonna flip over, look at the data. What's the data telling us? Data's telling us high of day is already in, that it came in around, what is that, 8 o'clock, 2000, so 8 o'clock. So if we flip back over and look, when did the high get put in? It got put in at 1935. So it missed it by roughly 30 minutes. Not too bad. We'll take it. But we'll flip back over. We'll kind of look up and see what our stats are telling us. 83% to break the middle of Asia, 79% to break the middle of London. Well, that's kind of weird because Asia's up here, London is down here. So there's less of a percent chance to get this than this. So just in case, we're going to look to short this thing before the open. So if we're going to sell this here, now typically, we'll take several contracts. And if you trade the MNQ, that's fine. But what we're going to look to do here, and the problem is the reason I don't typically do this is because you can't set multiple targets on a replay, which is really dumb, which is why I don't normally just take shorts and longs and stuff while we're doing these replays. But either way, we're going to look to short right in here. We're willing to ride this thing up to go get these targets. Why? Because this data is also telling us the chances of breaking that high, 67%. I'm sorry. The chances of getting back to midnight, 67%. The chances of breaking the high are 56%. Breaking the low is 86%. Breaking the low. Yeah, you know what I mean. So we're going to take this thing short. Now, what do we have to deal with if we go long? We have this pattern here. That's basically giving us this 786. So that 786, we don't want to see it go much more than that, because if it goes too much further through this 886 to go reach up for this Asia mid, which is this white line that we've drawn here, we're going to have to possibly sit through a push through the high. We don't want to do that. So we'd have to figure it out if that occurs. Do we just cut it, wait for a setup back to the low side? That's probably what I would do, because it would be a bit anomalous, because we do have a really large pattern that we missed completion of by 5 handles. The market doesn't forget these kinds of things. The market never forgets. It's like OCD. It's like it has OCD, whatever. So either way, so we'll take that out. Now you have this bigger shark setting up as well. That shark could take you to the 886 up here, all the way to the 113, and set up a continuation to the long side if it wants to. So we have to know that these two patterns exist, right? If you're going to if that shark starts to play out, the things you have to look for, this 886 to 113, right? Then you get that 50% pullback. If we hold that 50% pullback, that thing's going to try to keep going. It's going to try to build out the equivalent of, like a deep crab. All right, so now we know that that's there. So we're going to take this thing short. We're going to watch it and see what happens. Now you got to remember, whenever this thing goes short, this is where we have to do a bit of what we call wargaming with the database. So now we have to anticipate that we're going to go short first, all right? Because when we have this set up, it remains true. So what we have to do is in our mind, we have to say, okay, this thing's gone short. So we're going to anticipate to break this side down here. Now, what does that tell us? Well, let's go back and look at data. Still have an 82% chance to go take out this Asia area up here. And even a less chance now to go get this London mid. All right. So the interesting thing is that even though it doesn't count, we came back to get this Asia mid. All right. So, and we almost came back to get the London mid here. We just keep rejecting. So, and we can anticipate that this thing's going to go short now, knowing where we're going to add, possibly get out if it continues up. So what does that tell us? So we're going to take our short here, and then we're going to look for several targets. So now that we've anticipated this to be the case, we're going to scroll back down. We're going to look, we're going to look and see. So now we have a 90% chance to squeeze through the low and a 42% chance to get back through the high. All right, so still the same for the midnight, but, you know, we bounced around the midnight. All right, so we've got, yeah. All right, so now we're looking to take it short. Let's look at where we're going to take it short to. So we've got a couple of harmonic patterns working out here. We've got this pattern here that's going to set up a 272. And if it squeezes out, it's going to try to squeeze out into this 1618, 1902. So you can look for some trouble right here near the low. You can absolutely expect when you get to this 272 down here, or 1.272, it's going to try to hold. It's going to try to keep from breaking through that low. But unfortunately, that 1272 is down there, and it does get us the low side target. So you can expect to pop back into or around 930. Now, what are we doing bigger term or longer term? We've got this flag kind of setting up to take us long as well. So we need to break the low side of that, and we need to hold it. I don't know if anybody else uses channels, but I still use them because they're very accurate, because this is where your harmonic patterns tend to set up inside of channels. This is just a thing that I use because it's something I've noticed over time. All right, so now we also have this right here. Now this is a bit of a shark looking setup down to a 1618, 1902, which gets us almost into the low of day. Now we're going to look at something else that I pay attention to, which is this Tuesday open range. It's just the 930 to 1030 on every Tuesday. It's above Sunday, and the Sunday open range from 1800 to 1900. Like you can try to figure out stats on that. That's not quite in a database yet. It's just something that we've acknowledged over time. So where's our first target? Our first target's the 1618. We can take something off here on the sweep. We can take another piece on the 1618. After that, I'm only looking for runners down to this low of day zone. And the reason is we have 3 harmonic patterns setting up here. We have one here, which gets us down into this purple box right here. We've got one from here that gets us down into this purple box, and then we've got an even bigger one down here that takes us even lower. It takes us back into the Sunday open range. But the anticipation is, because of this flag, the market wants to go up, but the way the market's set up overnight, it's going to come down first. And you have to understand, there's somebody always knows. That's conspiracy theory or whatever, but somebody always knows, right? The market has set up, it'll come down to reach whatever targets it needs to. And then, news happens or whatever. And then, boom, we'll reverse and we'll go get targets if that's our plan, if that's the plan. And the intention of the market because of the way that they created this flag on this high up here. So, but we're going with statistical probability for day trades. And the statistics are telling us it's going to go down. So we're going to take our short. Right? So our first target is going to be right here. Right? As soon as we get to that 1618, which lined up. I'm pretty sure it was perfect. Yeah, the 1618 is perfectly set on top of this Tuesday zone. That's not by accident. So that's where most of the trade needs to be done. The rest is just gravy if we can get a continuation to the low side. You're going to find trouble in this initial low of day zone, right? And that low of day zone is right here. That's the first low of day peak, but we're expecting it to get to the second, or the main low of day peak, right? Now, these types of days, they will just knock you out continuously. If we get no news or anything for the market to recover, a lot of times we'll just keep driving down to go get the rest of these little patterns these larger patterns that set up. And we'll keep doing it until there's just no more stops, right? There's nothing else to get down there. And then they'll have to reverse the market and take it up, get people to chase and either squeeze it back through the high or dump it back through the low and take them out. So here we are. So we'll start playing this out and we'll look to get our two harmonic patterns. We want to be mostly out here and we want to be completely out down here, right? So my main target to the low side was 180. It was in between this pattern and the low of day zone. And that's really what it amounts to. So our first target, main target, is going to be here. We'll draw this line. We could also take profit on this 12-hour low if we want, since we know there's a little pattern there. But the runners that we leave we want them to come down here. All right, so we'll knock this out and we'll look for our targets. Now these are 5-minute candles, so it's just going to be what it is. But all right, we go short. We anticipated that. We anticipated it in the data. So that's what we've got. So now we continue down. If we wanted to take profit here, there's our first target. Right now, what are we looking to salvage? On any moves back up, we're looking to salvage that 1 minute candle, that 930 zone. All right, so the 930 zone, do we need to move to 1 minute candles to see it? Yeah, okay, that's fine. We'll do 1 minute candles. But we don't want to break back through the 930 zone. So if we're going to continue this down, we do not want to get back through the high side of that 930 zone. That's very dangerous because that means we're going to start pushing up to go get these other targets, which could set up an additional piece of a shark. Like it could set up things to go against you. So we want to reject 930. And we did. Here we are. So we've got our first two targets. So at this point, when we got down here, I've somehow missed this, but when we got down here, this is where a majority of the trade is done. So now we're down to runners, right? And on those runners, we don't want to get back through the 930 zone. And remember, we took the trade up here, so we can set our stops break even, or we could just set them a little bit above. However, it is up to you. It depends on what your tolerance for fear is. But now, what are we looking for? We're looking to go get down into this zone to get this pattern completion. And that's it. That's all we're looking for. So most of our money is made. We're happy. We're good. We're just looking for the rest to come down here. Not get back through the 930. It was a lot to sit through, I will say. I just walked away and didn't pay attention. And there we go. And we did set up here another move to the downside to try to go get another 1618 down through this low of day zone. But I wasn't really looking for that so much because I was looking for the target at 180 and I was out at that point. So when we swept this 180, I was out. And, we could have continued down. I do recall at some point down here, we got news that the Gaza war was coming to an end. And so, I mean, that in itself is a reason to try to get out because, you know, the market's going to try to pump on any news. It's going to try to reverse and do what it needs to do. But if we even start looking at, oh, that's the current market. So on this low, if you look on the 5-minute, we got deviation on the RSI here. We got it on the ES. We got it on the NQ. We mostly had it on the RTY. And we also had it on the Dow. And there was deviation on the 15-minute, on pretty much all of them. Yeah, so everything basically said this market's going to try to reverse. Now, I didn't take it long at that point because, you know, I was done. Some days I just wonder why I don't, but, you know, I just trade my plan and then I finish it from there. Now, what is our potential move to the high side? Well, at this point, if we were to go back and look at the statistical data, let's just say we ripped through the high. Well, the New York session was a true session, right? If we get back here, this blue box is what we call New York 2. So we look at two pre-sessions for us to look to trade around. So now this went short. If we go down here to New York 2, the anticipation was for it to go short here, right? The anticipation for New York 2 was to go short. Now, the anticipation was also for it to stay true. But I don't typically trade the New York 2 session. It's just, you know, I tend to want to trade the volatility at the open, find the setups, and then go from there. But let's finish playing this out and see, because if we go back and break that to the high side, and we go back and break this to the high side, well, what's our high of day look like? Well, currently, our high of day is looking at a 0.1 to a 0.2. Well, 0.2 is right here. Well, that's not a ton, right? So if we go back and we look at, you know, we say this thing's going to go short, and let's just say, let's swap back over here and see what happens with New York 2. Look at what this anticipation. We're rejecting this 930. We get back on. It's just a previous 930 zone, and we've turned that false. So now we're going to run into some issues here, because when you start putting too much data in, you're going to find that the number of days that match it are going to be less later in the day. It just tends to be that way. So we have 11 days that match this entire setup today. This is why it's a little bit harder to trade later in the day. Now, there are ways you can go take off these previous sessions here. And what that does is it takes off the data for this Asia pre-market, this whole Asia session, because it usually doesn't have that much of a bearing on later in the day stuff. But even still, if we come back over here, we're still looking at a 0.1 to 0.2. Still telling us that the high of day is already in. Okay, it doesn't mean that that's necessarily the case, but all of this data is still telling us that more likely than not, the high of day is already in. The high of day being put in at the end of the day, out of the 51 days that we now have, back to like 2008, only one time, I think, roughly two times, we've had the high put in into the close. That's it. Typically, we continue down. So we'll have to see how the rest of the, oh, well, it looks like the market just closed. Let's see. Yeah, okay. So there you go. We didn't get through the high of day. So I don't think I have much else to talk about for today. I mean, that was a pretty decent setup with some risk, right? Our risk was getting back up here and getting momentum to go through that high, which would have changed things, made this a bit of an anomalous day. And so, but we still, even into the close, didn't get back to 930. Now there's another stat that we tend to set up here. Yeah, and it worked. No, it didn't. It did not. Yeah, I wouldn't have traded that either way, but it's not a stat in the database. It's just a statistic of returning to the 1400 candle open, which we did not really do. We tried a couple times, but it didn't get down there. Yeah, anyway, that's the data and the harmonic setups for today. Right? This is, I mean, even yesterday, if we look back, this alt bat setup, data was telling us that we were going to try to pop into the open. There was the potential after the open to pull back and come back through, but typically alt bats, once they get moving, it's pretty tough for them to lose momentum. And if you don't know what an alt bat is, it's basically just a smaller B point here, right? It's a smaller pullback where you tend to hold, set it up, and go. And it just tends to be one of those days where you get to a point, you're like, you know what? They can't go any higher, and you short, and you keep ripping through your stops, and you rip through your stops. And what this ended up setting up overnight was a move to try to go get this 1618 up here, which it did not. It only got to the 1.414. So there are two targets up here. There's this one and then another 5. There's this one up here, another 5 handles above. So if we go look at this previous setup here, so this can absolutely squeeze out into here because it's a within the 1902 range. So who knows if it'll happen overnight, but it's just the anticipation of looking backwards to look forward to see what's going on, what's setting up, what's possible. And then using statistical probability to make a choice. And sometimes only, well, actually, I can't say that the data was wrong. Only one time last week did I trade it wrong. But yeah, I mean, I can't think of a time where it's really been like blatantly wrong, especially in the past, month or two. But either way, this is where we are. These were the setups for today. I tend to be a bit long-winded sometimes, and I apologize because I tend to blab on. But yeah, these were the setups. Hope everybody had a good day, and I'll make another one of these soon.